Hello and welcome to Mullen's Benefits Companion, a podcast that helps employers navigate the complex legal challenges of managing their employee benefit plans. I'm your host, Brydon DeWitt, and today I'll be discussing a new notice requirement for individual account retirement plans, such as 401k plans, that was part of the Secure Act. The Secure Act was passed at the very end of 2019 before the pandemic, and there are many requirements in the Secure Act that are coming online post-pandemic. And so it's important for employers to understand that the Secure Act rules are coming into play. And one of them, which is upon us, is a new notice requirement for individual account defined contribution retirement plans, such as 401k plans. The Secure Act added a new participant disclosure requirement for 401k plans to help participants understand how their account balances translate into lifetime income during retirement. And so under this new requirement, plan administrators must provide at least two illustrations of how a participant's account balance translates into lifetime monthly income. Specifically, the illustrations must show a participant's account balance converted into a single life annuity and also converted into a joint and survivor annuity. And the Department of Labor has provided guidance that specifies certain assumptions that must be used when converting a lump sum account balance into a stream of payments over the life of a participant or the participants and their beneficiary. First, the assumptions must treat the benefit as beginning his or her retirement at the beginning of the end of the statement period for the statement that's issued to the participant. Second, the participant is assumed to be age 67. Third, the interest rate used must be the 10-year constant maturity treasury rate. And finally, the gender neutral mortality table under Internal Revenue Code section 417E3B must be used. And so those are the assumptions that a plan administrator must use to convert a lump sum account balance into a stream of payments. This notice requirement is going into effect pretty soon. So for plans that allow participants to direct their investments, the first illustration must be included in any quarterly benefit statement up until the end of the second quarter of this year, which ends June 30th, 2022. For a non-participant directed account plan, the statement must be included for the first plan year ending on or after September 18, 2021, which will be furnished by the deadline for the Form 5500 for the plan, which for calendar year plans would be October 15th, 2022. So plan administrators need to be aware of this requirement and need to be prepared to provide these illustrations of lifetime monthly income for participants, which really will help participants understand how their 401k savings are going to translate into retirement income for them. So that'll wrap up my discussion of the new lifetime income illustrations required this year. Thanks for joining me on the Benefits Companion. If you have any questions or suggestions for future episodes, please contact me. You can also visit our employee benefit page at williamsmullen.com/employee benefits. There you can find out more about our team as well as past episodes of this podcast and legal alerts. And finally, be sure to subscribe to this podcast to be notified when our next episode posts. Thanks for listening.